Mayor Olivia Chow, who just came in and proposed a 6.9% property tax increase as a part of Toronto's 2025 budget. Like, you're really not giving any relief there, are you? And that's a tough situation to be put in right now too, right? As you're struggling.
And that's what happens when about 17% of people in Toronto vote, right? So if you don't want to be dealt these bad cards, get up and vote for someone who's going to look after the city. This city of Toronto is run terribly. There's no cuts. They don't believe in cutting the waste. It's all about paying for more programs, more this, and the city doesn't function properly. So, you know, that's going to come to a head at the next election. Hopefully people wake up. I think more and more people are being more concerned about what's happening in politics at different levels. So hopefully the people that go out and vote increases. We need more participation, and we got to hold everyone accountable, regardless of political stripes. Like, we need to hold their feet to the fire and really stress that we want accountability.
Another big concern, Vince, that I want to talk about and want to mention here is they're saying by 2026, 60% of Canadian mortgage renewals will face higher rates. Many homeowners will be renewing at rates significantly above their original mortgages, which is going to be tough for them to continue, you know, carrying on that mortgage payment. It's going to be mortgage shock to them. And we're going to see this throughout 2025, where a lot of these renewals as well are going to start to reoccur. And people are going to have to really look to start budgeting and figuring out their financial situations on them. What steps should homeowners take to prepare for these higher renewal rates, Vince?
Well, one thing that we should all keep in mind is that the stress test came into full force in 2018, 2019 for pretty much all Canadians. So all those cohorts that are renewing in the next 2 years have all gone through the stress test. So everybody qualified at least 5.25, maybe some were at 489, but then it moved up to 5.25. So everybody was stress tested and qualified at that number. Looking at where rates are right now in the fours, mid fours, everybody should be less than that stress test. So they should be okay. In 5 years, people's incomes go up, but at the same time, they may have incurred new costs. Maybe there's kids that have come into the picture. Maybe they've taken on another car, or maybe they've increased a debt with some renovations or a line of credit. So they should look at trying to qualify themselves based on where they were and where they are today to make sure that their costs are still within that qualifying range.